5 years ago because the economy is much, much larger. So in dollar terms, the China market will do very well.
And what is growth momentum?
The growth momentum is very strong because as they move from state-controlled economy towards more market-oriented economy, you will see a number of companies do very, very well. Of course, there'll be failures along the way, but if you have the right stock selection, then it should do quite well.
And how about the renminbi? Because you once mentioned that renminbi will once become the global reserve currency in the 5 years. But we see renminbi has its depreciate. So how's your view on renminbi? Will they go stable recently?
Well, if you look at the last 10 years, you'll notice that the renminbi has been getting stronger and stronger on a steady basis. And a lot of that has been controlled by the government. Of course, they've kept a very close control of the currency. Recently, they've allowed the currency to move in a wider band. So this recent decline of the renminbi is planned by the government to again move towards a market-oriented exchange policy. This, of course, prepares them to become a world currency. And no, I believe that the currency will fluctuate much wider than it has in the past because of this new policy towards a market-oriented currency exchange mechanism.
And we know that a lot of investors in Taiwan, they are investing renminbi now because they think it is really cheap. Do you agree with this?
I agree that from a long-term potential, it's a good idea to have renminbi because we believe that it'll get stronger against other currencies over the long term. But there will be these fluctuations that I mentioned.
And when will see renminbi be stronger?
Probably next year we'll see a stronger renminbi.
Before June?
I can't tell whether it be before June, after June, but generally speaking, the long-term trend is up.
And when we talk about the emerging market, we will focus on the BRICS. And we talk about the China, then we want to talk about the Russia. How do you see the Russian market this year?
This year, of course, the Russian market will be depressed because of what's happening in Ukraine. But the Russian stocks are very, very cheap. And if the Ukraine situation is resolved, which we believe it will, these stocks will probably rise again. So there's a good chance that you will see better performance later in the year in Russia.
And how about India? We know that India has the world's second population, and someone think that it will be the great economic potential. But their stocks market have already made its record. Do you suggest investors to focus on the Indian stock market?
Of course, India, as you mentioned, is a very large population, a very dynamic market. There are excellent companies in India who are becoming globally competitive. So we believe that it's important to be in the Indian market. See, what's happened is there have been political change. You are now seeing more reform in India. As you know, they have a very bureaucratic system, lots of rules and regulations which discourage enterprise. And now that's changing. And of course, that will add a lot more dynamism to the Indian economy.
And how's its growth rate?
Growth rate will be about 5 or 6%, which is pretty good for an economy of that size.
So besides India, is there any emerging market that will be more attractive?
Many of them will be attractive, particularly the frontier markets. If you look at markets in Africa, in some places in Latin America, and here in Asia, Vietnam, for example, would be one of the frontier markets. These markets are quite interesting.
But what's its growth momentum, like Africa?
The growth momentum is coming from a number of areas. One is inward investments. As you know, China is active in Africa. Many European companies and countries are active in Africa. In addition to the fact that you have a base which is very low. In other words, if you have a low base, the percentage increase can be very great. So that's where you see the excitement in Africa, because they're starting from almost zero, and of course they're moving up, and they're leapfrogging the technology. In other words, they're introducing technology when there was none before, and that results in much higher productivity.
But we still think that some challenge that in the emerging market, that is the fade taper begins. the capital outflow that began happening in the emerging market. And we see that some emerging markets currency have great depreciation. Someone worry about that will cause the financial crisis. Do you worry about it, or what's your attitude?
Well, if you look at the currencies in these emerging markets, you'll notice that a few years ago, these currencies got very strong. They got too strong. Brazilian real is a good example. Then, when there was talk about tapering, the currencies came down because a lot of investors who were invested in the bond markets in these countries exited. And of course, when they pulled out of these countries, the local currency got weaker. I believe that this is actually a good development because most of these currencies had gotten too strong so that they became globally uncompetitive. Now the currency rates are more realistic. It's much easier for them to export, and I believe it's a positive development rather than a negative development. So in our view, you have to be careful to select those stocks which will benefit from a depreciated currency. A good example is in India, where the companies that are doing the outsourcing, they're using Indian know-how, Indian personnel, Indian staff, and they're exporting in US dollars. So their earnings have been going up very rapidly, and of course the stock prices have done very well.
But we also see that some emerging market government, because they want to support their currency to resisting the depreciation, they raise their interest rate. Do you think that will cause any bad effect in their economy?
Of course, in the short term, higher interest rates will affect the economy. But a lot of these governments are becoming more realistic. They're allowing their currencies to get weaker, and they're resisting the temptation to raise interest rates. Of course, they're worried about inflation, but globally, inflation is really subdued. And one of the reasons is that productivity has been increasing in many countries and on a global basis. Because of the internet, because of better communications, productivity is rising very rapidly. In other words, you'll have maybe a small rise in inflation as a result of higher cost of imported materials, but usually they will adjust fairly quickly to that.
And how about the global economy? We see that Europe, the crisis, not really over. How's your prediction for the total global economy this year?
Well, if you look at Europe, actually they are now in a recovery phase. If you look at a country like Greece, they're already recovering. If you look at the prices of their debt, you'll see that these prices have risen. So I would say, generally speaking, Europe is on the mend. They are now on the recovery path. And that's, of course, a very good sign for the rest of the world. And, of course, America, as you know, is now in a recovery. Maybe we'll see 2 or 3% growth this year, which is positive for the rest of the world. It's the largest economy in the world. So that would be very positive. So if you look at the total picture, America growing, Europe recovering, frontier markets moving up very, very fast, emerging markets doing quite well. Japan, of course, is now on the recovery phase, pumping a lot of money into the economy. China is growing at 7%. So if you look at the total picture, it's quite positive.
What's your suggestion for Taiwan's investor to the investing allocation in this year?
Well, the main thing for Taiwan investors is that they must be globally diversified. Don't just stick to the Taiwan market, because the Taiwan market will not always be the best place to be. Sometimes it'll go down, sometimes it'll go up. So you must invest globally. That's the first thing. The second thing is that you must put your money into equities as much as possible. Of course, you have to have some bond investments, but equities are very important for the long-term investor, because equities have shown that they do well over the long term.
And as a father of emerging markets, everyone codes.
Thank you.
We are also curious about that. What's your investing